Welcome to this very special conversation with Larry Zimpleman. Now, he's the CEO and Chairman of Principal Financial Global. The Principal has over $430 billion as assets under management across the globe. That puts Larry in a very good position to give us a view on the global economy and to give us a view on India in particular as an investment destination in comparison to the rest of the world. Larry, thank you so much. Welcome to India.
My pleasure, Faye. It's a pleasure to be here. Thank you for having us.
I want to start by talking to you about the American market. We've seen an interesting turnaround, if I may use the word, over the last 6 months. Stronger numbers. We've seen better, jobless data come in. We've better GDP. Has the American market turned around for good, or has it just stepped away from the cliff? How do you see it right now?
Yeah, I think there's reason to be optimistic about the American economy going forward. And I would just mention maybe two elements of at least that optimism as we view it, Faye. First of all, residential real estate is really turned from a headwind to the U.S. economy and to economic growth into a real tailwind now. I think the improvement in residential real estate in the United States, it's sustainable. It's real and it's sustainable. And so I think that gives me reason for optimism as we go forward in 2013. So it is sustainable, and we should see a tailwind there. The other one that is also a more recent tailwind is state and local governments. Many state and local governments in the U.S. have balanced budget requirements. And so in the period of 2008, 2009, 2010, those state and local government budgets were being cut. And over the period post the financial crisis, we've seen approximately 750,000 state and local government workers who have been laid off as governments had to balance their budget. Again, because government revenues often tied to residential real estate, we've now seen that turn around, and we now see state and local budgets and revenues are now growing again. So again, the thing that had been a headwind to the economy now looks to be more of a tailwind. So we do think it's sustainable. We are reasonably optimistic on the U.S. economy.
Well, there was the event risk of the fiscal cliff that seems to have passed at this point. But are you happy with the work that's been done for fiscal consolidation in the U.S.?
Well, the one area of concern that we have about the U.S. economy going forward really is the challenge of the political dysfunction that we continue to see too much of in Washington. I think there's a slight reason to believe that the politicians now understand that they can derail the improvement in the U.S. economy if they're not careful. I think that the issues that you talked about are kind of behind us. The challenge, I think, for our political system in the U.S. is how can we craft a budget, a long-term budget, that is fiscally sustainable and that's going to put us on the right path to close the budget deficits and ultimately grow the economy.
Let's talk about Europe. Again, this was something that created a lot of fears across the globe for a while. But would you say events in Cyprus are sort of a reminder that the worst is not over, or the issue hasn't passed?
Right. Yeah, the issue has not passed. The issue, I think, in Europe, again, I'm not the PhD economist, but I think the issue in Europe, Faye, is actually a bit of a more systemic issue in the sense that governments in Europe, particularly Western Europe, the reality is that they've promised more in terms of benefits to their citizens than what their economy is ultimately going to be able to deliver on. And I think we have to be careful in the United States that we don't go down that same path, which is why I mentioned earlier we have to find a long-term solution to fiscal balance and fiscal sustainability. The governments in Europe are doing exactly the same, except their hole's deeper. Their problems are more acute. They need to find more drastic solutions. And I think that's what they're in the process of doing. They need to open up their labor markets. So we'll see what happens. Definitely Europe has not passed us. But I think that the tail risk scenarios, what people talk about is the tail risk scenarios, including the possibility that the euro would fracture or that people would leave the euro and the EU would fracture, I think those probabilities have lessened quite dramatically.
How long do you think it's going to be before we can safely say the EU is out of risk?
Well, I think it's a multi-year issue, right? It's not a 1-year issue, a 3-year issue. it's probably a 5, a 7, or a 10-year issue because these economies have to get back to growth. You know, at the end of the day, it's growth that is going to solve, you know, sovereign debt issues. It's growth that is going to allow rising incomes. It's growth that's going to allow, you know, real estate values and other values to sustain themselves and grow over time. So the world has to get back to growth, particularly Europe has to get back to growth, but that is going to be several years down the road before it's truly sustainable.
But the other big change we've noticed of late is Japan. The markets are doing really well. There's a government that's making very pro-business announcements constantly. Are you positive on Japan right now? Is it looking like an investment alternative to someone like you?
Very interesting question. We actually were in Japan about 3 weeks ago, and we had the opportunity to spend some time both in Osaka and Tokyo. Clearly, when you're in Japan, you see a noticeable change in attitude. Change in attitude at the street level, change in attitude at the business level, and certainly a change in attitude at the investor level. Again, not being the PhD economist, while I have a degree of optimism for Japan, I think it too faces a longer road to sustained economic growth. So we've seen some immediate impacts by the change in monetary policy. But now what we have to see is we have to see that turn from sort of the short-term stimulus and the impact that has to see now, can the Japanese manufacturers return to global competitiveness?
Well, the BRICS haven't been doing very well in terms of numbers. We saw China's numbers come in slightly softer than expected. But at 7.7% growth, is it still the best among a slightly bad bunch?
Yeah, as a general matter, we're actually optimistic on the BRICS. You're right that growth is off a little bit, but I would say that growth is more sustainable. It's very naturally expected that China's growth cannot continue at 10% per year. That's just an unsustainable level. And at some point, actually, in the medium and longer term, the fact that China's growth is moving, say, from 10% per year to something more like 7 to 8% per year, in the medium and longer term, that's actually a big positive because it's more sustainable. So I don't view the supposed weakness, 7.7 instead of 8. I don't really view that as any sort of a problem at all. And again, we remain very optimistic on the long term.
Well, as a global pension fund right now, if we're talking about global equities, where is your focus? Is it the developed markets, or are you still looking at emerging markets? Are you still looking at BRICS?
We continue to believe that most investors, certainly investors in the developed market, are underexposed, underinvested in emerging markets. Now, that would be both fixed income and equities. And so if you look at the global equity markets as an example, the emerging economies are approximately 45% of global market cap. So I don't know that the average investor should have 45% of their equity portfolio in emerging markets, but certainly they should be in that 15 to 20% range. I know from our U.S. experience that the average investor in the U.S. has perhaps 5%, maybe at most 10% in emerging markets. It should probably be double that. So we remain very optimistic on emerging market economies and emerging market, again, equities as well as fixed income. Why fixed income? Because the yield is higher. Investors all over the world are starved for yield. And that's a way to sort of improve yield and improve diversification.
Larry, we were talking about emerging markets before we went into the break. You personally said that Principal, in order to offset the low interest rates in America, will look towards emerging markets. Is India one of those markets?
India is one of those markets. I think that the interest rates here in India remain by global standards today at pretty high levels. And I've noticed that the Sensex is up, I think, the last 2 days, approximately 2.5%, and I think it reflects investor optimism here on a local basis that we will be seeing somewhat lower interest rates here in India, and that should be a positive sort of background for the equity market here in India over time. But this is the change that we see going on in emerging markets, sort of all over the world, is interest rates coming down, money that had previously been invested in bank deposits and time deposits now having to look for other alternatives because they can't just attract a sufficient rate of return by being in a time deposit anymore. And so that's why our strategy, focused on emerging market equities, emerging market fixed income, we think is going to be a winning strategy as these economies are sort of restructured and they move away from the sort of high interest rate policies that's been there in the past.
But the RBI has been reluctant to bring rates down. How long do you think it's going to take for that interest rate cycle to turn?
Well, I can't predict interest rates, but I know directionally which way they're going to go, because economies that are faced with interest rates that are as high as they are here in India and as they have been historically, those economies are going to underperform what their natural growth rate's going to be because of the high interest rate. I mean, that's just a fact. And so, the RBA here, the central banks all over the world want to promote economic growth. And I think the best, long-term way to do that is to bring interest rates down to a sustainable level. I'm not talking about to an abnormally low level. In the United States, because of quantitative easing, we have interest rates at an abnormally low level. That's not good for the economy because that has the potential to create inflation. But at the same time, if interest rates are too high, then it stifles other capital that needs to be invested in the economy, the bond market, the equity markets. And so there's a balance here, and I think the RBA is trying to find that balance, but they're trying to move in a proper and judicious way.
Well, let's talk about India's macro numbers right now. We've seen GDP come in lower, inflation is really high, reform hasn't really taken off the way we would like to see it. What's your view on India in terms of the economy, in terms of what the finance minister is doing to turn it around?
Right. Well, we're a believer in India, but it is, understandably, it's a little more of an intermediate term and longer term issue. It is important for all these emerging economies, and India would be an example of this, to really reform their laws, particularly their labor laws, begin to reform their capital markets, to allow capital to flow in and out more freely, to become, a bigger part of sort of the global economy. So there's both reform and there's restructuring that has to go on. And I'm sure there's many different constituencies here in India that I'm, not aware of and probably don't fully appreciate. But what I would say is that this restructuring, particularly to open up labor laws and to open up investment both in and out of India, are some of the most important things that can go on for the long-term good of the economy. From
earlier this year, in February and March, we have seen a massive amount of dollars leave our shores from the FIIs and the ETFs. Is India facing a crisis of confidence from global investors right now?
It's probably a more short-term issue focused on just some unhappiness with the speed of perhaps some of the regulatory change and some of the reform that's going on here. I don't think it reflects necessarily a long-term disillusionment that somehow India is not going to be one of the real emerging economies over the next 8 and 10 and 15 and 20 years. It's just that investors sometimes get a little ahead of themselves, their expectations perhaps get a little out of line, and so over time there's sort of this balancing process that has to go on.
Well, if you say investors have very high expectations, I mean, our finance minister has been traveling. He's traveling right now,
right,
speaking to global investors.
Right.
He has made promises about bringing both of the deficits, the budgetary deficits, under control. Are you impressed by what has been done so far? Do you think we're on our way to bringing perhaps the current account deficit under control?
I think investors it's natural and appropriate for them to have skepticism. There is a degree of patience that's needed to be part of the Indian economy. I can tell you in the case of our company, we've been in India, as I said earlier, more than a decade. We continue to believe that the Indian economy will be one of the stronger economies over the long term. And we think by continuing to invest here while we're going along, having some short-term fluctuations, it's going to have long-term benefits for us. So we continue to be excited about India, but we recognize, again, it's going to be a volatile and bumpy ride.
Well, a little bit of good news for our current account deficit was the gold prices that came down, right, crude oil prices that came down over the last week or so. How much longer do you expect the sell-off in these two commodities to carry on for? How much longer can we expect them to be soft? Well,
I think these things become more apparent when you look backwards, right? And so I think what we've seen in commodities as well as oil was a sort of mini bubble. I wouldn't call it a bubble in the sense, say, that we saw with residential real estate in the United States. I certainly wouldn't go, to that length. But I think that we did see in the 2010 and 11 period, I think we did see rises in commodity prices and rises in the price of oil that were beyond what the economic growth within those periods would necessarily say should be happening. And so now we've kind of pierced that little mini bubble. And I think that, again, going forward, I think that's actually a piece of good news because the price of oil comes down, the price of energy comes down. It's going to help to stimulate economic activity over time. It'll make companies globally competitive that were not so before. And so in the longer term, in the medium term, I think it's going to have some positive impact. So I like the fact that we've achieved a more rational level of pricing in commodities and in oil without having a big global disruption this time around.
Well, you did talk about the fact that you've been here for a very long time as principal, as part of your business. You've been waiting for pension reforms in this country for a very, very long time. This is again something the government has been looking at, bringing in FDI in areas like insurance and pensions. Are you disappointed with the pace at which pension reforms have carried on in this country?
Faye, those are great questions. To be honest, I am a little bit disappointed. Again, I understand because of the politics, it can be difficult. And actually, we're at a point in our strategy here in India where we're actually moving ahead because we think that corporations here in India, as they continue to try to attract and retain high-quality workers, at the end of the day, being able to offer savings programs that help people secure their financial future, is going to be one important tool to differentiate yourself as an employer and to attract those higher quality workers to your workforce. So we're actually moving ahead with our own sort of program to focus on the opportunity for retirement and long-term savings.
You did mention some time ago that Europe is currently having to pay the bill for making large promises for benefits. Now, in India as well, there seems to be a path the government is taking where it's leaning towards guaranteeing pension benefits as opposed to a defined contribution movement. Do you think we run the risk perhaps in the future of not being able to make good on those guarantees?
I think there's no question that India should think carefully about that. Because when countries sign up to provide, if you will, defined benefit forms of income, or even defined benefit forms of health care, the one thing that you have to think about in order to deliver on that is you have to sort of think about what the demographic future is going to be of the country. I think today, because of the younger population in India, again, that looks like a sort of interesting way to go. But they need to think 20 and 30 and 40 and 50 years down the road to think about, what does India look like in 2 generations, and is it sustainable at that point in time?
Well, let's talk about your mutual fund business. It's a crowded space in India. There are over 40 companies. You're at number 23, from what I understand, in assets under management. How will Principal PNB differentiate itself?
Sure. So let me mention a couple of more specific examples, because for Principal Financial Group, mutual funds are a global business. It's not just a local business here in India. We're in the mutual fund business in every country we operate, which is the United States plus 10 other countries. And so we are continually developing and refining global best practices as it relates to the mutual fund business. And that's one of the big things that's going to differentiate us over time. So let me just take quickly one example, if I might, Faye. Let's talk about product innovation. We know what works in terms of product innovation from the 10 other markets where we operate, because some of these markets are more developed. So, for example, the United States is a much more developed mutual fund market than it is here in India. So there are the fastest selling form of fund in the United States are so-called life cycle funds, which are asset allocation. They're balanced funds, appropriate either to age or risk tolerance, and we know how to manufacture those. So when we come here to India, that's an example of where we can offer a very innovative product, probably something that most of those other competitors can't offer, which is what's going to differentiate us over time.
Does the regulatory environment within financial services in India allow for that sort of innovation? Because we saw Fidelity exit the Indian market after 8 years last year, and they talked about the fact that the regulatory environment just did not allow them to do business with ease. How would you rate the ease of doing business in India's financial services market?
Well, it's a challenge. To be honest, it's a challenge. But going back to what we had talked about before, when regulators are sort of making things a little more difficult, say product introduction, it's because there were some problems and there were some challenges, and regulators need to review that, and they need to try to overcome whatever those problems and challenges were. So the regulator is carrying out, his or her, legitimate responsibility. In our case, we're going to be here, right? We're not going away. And we think that at the end of the day, the examples and the experiences we can offer from our other global businesses in the mutual fund space are going to be compelling to the regulator, and they're going to be compelling to the investor here in India. And so it may take us a little longer. It may be a little bit more difficult to go through that process, but ultimately it's going to be worth it because the long-term payoff in India is going to be so significant.
The other challenge that everybody within the financial services space is facing is distribution. Because regulation has brought the rates of compensation down so drastically, and we've noticed a lot of agents or distributors of mutual funds have dropped off the map and they're not doing this anymore. How does Principal plan to tackle that particular challenge?
A great question. I've been in the mutual fund and retirement business for my entire 41-year career, and I learned one thing very early in my career that I think is still a bit of a difficult concept in some markets. And that is that investment products and retirement products have to be sold to people. They're not bought. They have to be sold to people. And if they have to be sold to people, then some distributor somewhere is deserving of an appropriate level of compensation for the fact that they sold the product. But I would say probably for me, the single area of biggest disappointment in the environment here has been in the area of compensation and has been an over-regulation of compensation. What I personally would favor would be transparency in the compensation and then let the market decide. I think we're finding when we look around the globe, that's a better formula for the regulatory environment.
Well, you do have an Indian advisory arm as far as retirement solutions is concerned. I understand it has opened up in several cities right now. That's a fee-based system. Are you also looking at introducing pension products once the pension sector opens up to foreign players?
Yeah, we're actually very excited about the opportunity in the kind of pensions and retirement area. We don't yet know, as your question says, we don't yet know exactly, what that's going to look like. But frankly, we're so excited about it. We're going to go ahead and, as I mentioned earlier, we're going to try some things, and we're going to innovate, and we're going to, make it work. So we actually are very excited over that. Again, having done the research, we know that employers understand that one of the most important things they can do for their employees is help secure their financial security. That's what we want to try to do with these programs. And these again, can be fairly simple programs. I think sometimes people overcomplicate the whole pension issue. At the end of the day, what's the most important thing is to save on a regular basis. If I could just encourage, everyone listening to this program to do just one thing, please set up a program, save on a regular basis.
All right, we've run out of time, Larry. Thank you so much. That's a brilliant conversation.
It's a real pleasure. Thank you, Faye. I appreciate it.